Morning, everybody. It is 8:10 a.m., May 13th. Welcome to my channel. Now, yesterday we had a huge gap up, little pullback. I got long on that pullback, had a decent trade, and we just winded up pushing higher. Now, we did open, pull back, like I said, and then just closed a little bit higher than the open. Okay, we're almost hitting that upper trend channel that I've been talking about. We'll get into that later. Okay, and this morning we're just kind of hanging out up here, and it makes sense because CPI is coming out at 8:30. Now CPI right now we're expected to get for the headline number 2.4. Last time was 2.4. Now just keep in mind oil has been very cheap in this time, okay? And there's a lag. So I mean, obviously could happen. Do I think that it's going to be hot? Probably not. But we never know, right? They're actually expecting it not to move. So let's see. Now, core inflation, 2.8. Last time, 2.8. So they're really looking for this inflation to be stagnant, but who knows, right? And who knows if we get a lower number, right? Will the Fed now make cuts? Who knows? I don't know, right? And then tomorrow, we have more Fed speak, right? 30-year mortgage. And the 10-year yield has been, well, today it's down a little bit. But it's been up a little bit. So it's been kind of crazy. So that's what's been going on. All right, and that's what's on top for today. Now we have Fed Pal speaking later in the week. So as usual, there's been some earnings and stuff like that. But remember, the big earnings are done. All right. So without further ado, why don't we just get into this? Welcome to my channel. My name is Steven Gonzalez. I use market profile, volume profile to find structure in the markets, along supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day, along with anchored VWAPs and my trusty tool, the market internals. Okay, that just helps me go with strength in this market. Okay, I think I've been long the majority of these days. I hadn't, been trading pretty decently lately. Like I said, my edge is back with the VIX under 30. So, pretty happy with my trading as of late. So, just got to keep being consistent. That's the name of the game. All right, now hopefully you guys can join me every morning. I give you the news, the lowdown of the markets, right? I give you all the leaders and the laggards, the economic calendar, some earnings, and then of course daily charts, and ES and NQ analysis later, where I give you long and short trade scenarios that I will actually implement later on. Okay. Now, getting over to futures, let's look at what's moving markets. Okay. And the leader is Bitcoin. Bitcoin is at 103, almost 104. Okay. Ethereum's up 1.60. Crude's up 1.26. All right. Silver up 0.85. Gold up 0.58. Russell's up 0.20. Nasdaq is up only 0.07. It's pretty much flat. 30-year bonds are flat. ES is basically flat, down 0.08. Dollar is down 0.21. 10-year yield is down 0.38. And the Dow is down 0.45. Now, the Dow is down that much because United Healthcare is getting destroyed this morning because one of their CEOs stepped down. Okay, and they cut their guidance or something like that. I believe we can get into that later. So that's why the Dow is down. The VIX is down 0.87. We are underneath the 19 VIX at 18.23. All right, moving on to the Mag 7 Plus here. Coinbase up 10.11%. It has been added to the S&P 500. Okay, so that's getting love. Boeing's up 1.50. AMD's up 1%. Amazon up 0.94. Meta's up 0.81. Nvidia up 0.80. Tesla's up 0.51. Broadcom up 0.20. Apple's flat, and then a little bit of lagger here. Let's see, Google down 0.19, Microsoft down 0.21, Eli Lilly down 0.34. Okay, down 0.34. Moving on to sectors. Let's go to the sectors here. Energy is leading the pack, up 0.39, followed by semis. Discretionary, up 0.16. Technology is pretty much flat, and the laggard, of course, is healthcare because of United Healthcare. Okay, United Healthcare has been getting beaten, and the healthcare sector in general is getting beaten. Of course, with Trump too wanting to lower prices of drugs, okay, pharmaceuticals, that's hurting as well. That was supposed to be a bump up for United Healthcare because that would be less costs. However, that CEO is just driving the market lower. It just broke like a 387 level was a big weekly support. Now it's at like 344. So have to see, have to see what shakes out with this. It's a pretty wide moat stock. I mean, it's pretty profitable. So I know medical costs have been higher, but it's a solid company. So have to see what happens with that. All right. Now moving on to economic calendar, which I already showed you. So we'll just go into that again. All right. We got the CPI on tap for today. Like I said, expect no change in core and headline CPI. All right. If we look at some stock news here, we have Apple stock soared 6.5%. Oh, is that right? Hold on. I think that's old. Give me a sec here. That's got to be old. Sorry about that. That was definitely old. All right. Let's go over to here. Okay. So we have U.S. slashes de minimis tariff on small China parcels to 54%. United States will cut, I don't even know what that is, de minimis tariff for low value items imported from China. A White House executive order said on Monday, further de escalating a potentially damaging trade war between the world's two largest economies. United Healthcare suspends annual forecast. CEO Andrew Whitty steps down. United Health Group suspended its annual forecast, citing higher than expected medical costs, and said CEO Andrew Whitty has decided to step down for personal reasons. Okay. Analysts, United Airlines bears brunt of Newark Airport chaos. United Airlines is facing a financial hit and potential long-term reputational harm as flight delays and cancellations pile up due to ongoing disruptions at Newark Airport, one of the largest hubs and among the busiest in the country. Okay, China lifts Boeing delivery ban as tariff war cools. That's why Boeing's doing good this morning, huh? Coinbase shares jump on addition to S&P 500. All right. Let's see here. What else is going on? Honda, let's see, car maker forecasts a 59% profit decrease in the current financial year. Instead, it would put a hold on a plan to build an EV supply chain in Canada. What else? Oh, this is pretty big. E-commerce giant has hired FedEx, Amazon, all right, to handle some of its large package deliveries. The company said on Monday, weeks after UPS said it was halting its less profitable deliveries for the e-commerce retailer and cutting 20,000 jobs. The deal with FedEx signed in February gives Amazon cost favorability. Wow. I'm trying to see if that's doing anything to UPS. No, not really. All right. Let's move on. Yeah, we already talked about the United Health Group. Let's see here. Banking sector says easing of U.S. leverage rules could support Treasury market. And Fox.com, I know they report it. Barclays raises target price to 52 from 45. Alrighty. Now the juice. What's the juice got for us? I don't really see any red here to talk about. It says the U.S. Republican tax bill does not include a millionaire tax bracket. Okay. Now remember, 8:30 we got news dropping. It's about 11 minutes. All right. Let's look at the earnings calendar real quick. After the close yesterday, AST Mobile, Plug, what else? Hertz, right? Before the open today, JD.com, Honda, Intuitive Machines, let's see, Under Armour, all right, and then after the close today, Nubank, and then before the open tomorrow, Sony, Tencent, all right, that's the ones that I would note. Moving on, back to here, all right, now, trying to think here what I wanted to talk about. Do I want to go over charts? Let's just go over my one breath indicator that I like showing here. All right. So we're back to 80% of stocks in the S&P 500 over percentage of stocks over the 20-day simple moving average. Okay, that's 80. All right, once you get into the 90s, it's very frothy. You usually get a dip after that. Let's just see. Okay, we are in a barely, a seasonally bearish month in May. We're still almost towards the middle. Okay, so we just have to see what's going to transpire here. Okay, now money might as well go into the bullish percent index just to see where it's at. Okay, let's just see. We'll do the NASDAQ 100 first. Wow, getting pretty frothy. 82% of stocks are on buy signals. You notice here that that's pretty a frothy level we're at. All right, this is not me saying go and short the market. This is just an indication. Okay, S&P 500 we are at 76. Okay, so tech has more stocks on buy signals. All right. However, if we look at the investor sentiment is still pretty bearish. Believe it or not. Let's look at the bulls first. How much percentage are bullish? Oh, this went up 29%. All right, that rose up a little bit. Let's look at the bears. Bears are now going down. They were up in this frothy area of 60 something percent, now down to 51%. Okay, 51% of bearish. That's a look at those charts. All right, now we can move on. Let's look at daily charts together. Here we go. Here's our beautiful daily charts here. All right, so we have. Let me give a little room here. Okay, so all right, so here, let's put it this way, is our channel, right? So we have a main trend line, and then we have this closer trend line that's been honored, right? And we have this right here, right? We're coming very close, okay? And like I said, to the left here, this 583, let's call it, right? Right there is where the market stopped yesterday. How much juice do we have left? I do not know, right? But where are we at now? 582.64. We are hanging out at the highs of yesterday, basically. Okay, man, remember we got CPI coming out, so things can change. That really hasn't been much of a market mover as of late, but let's see. All right, that has a lot to do with the Fed Watch tool, so we'll see what transpires there. Okay, we'll see what transpires there. Let's look at futures. Get a little bit of a look at actually what's going on price action right now. Oh, here we go. There's that move up from Sunday, right? And then now we're just accepting the higher prices, holding the 100-day moving average. Okay, that's our futures. Let's go to the Qs. Okay, here's our Qs. Here's that trend line, secondary trend line, right? Hit right on that trend line yesterday. I'm sorry, didn't hit that. I'm sorry. We were up here, right? Pushed, had a nice little pullback in the Qs, and went all the way back up to almost to the top of this trend channel, right? And if you look to the left, there wasn't really that much resistance to the left here. I was talking about that yesterday. More like the 520, 519 to be resistance here. Okay, so have to see. Now, right now, we're currently at 508.20. We're at the highs yesterday. Okay, that's pretty much bullish structure. So let's go futures to just look at that to see how we dropped a little bit, and now we're right at yesterday's highs. Right. If you look on futures, you do have resistance right there. That's why that market stopped there at 209.50, about 209.60. Okay. All right, moving on. Triple headed monster. We got about almost 5 minutes to the news drops. We'll go there live. Okay. Let's look at our bond market here. This should change after CPI. All right, so triple headed monster coming right at you. There's that big wedge. All right, we pushed up, had 3 days up. Now we're hitting this trend line. We're hitting the anchor view up at 2025. What's going to happen? Do you take the swing high out, or do you keep compressing price? All right, that's the story there. Let's go to the dollar. The dollar pushed up, right? And it hit this trend line, right? It hit the 50-day moving average. So can you get a pullback here? Maybe that could be a long. I don't know. Okay. Remember, I was talking about getting long down here. need gold and stuff like that to keep pulling them back. That would help. Now, VIX is your fear gauge, 30 days out of fear. The VIX is dropping. All right, fear is going away. Underneath the 200-day moving average here, we're right at an 18.25 VIX. All right, under a 20 VIX. All right, 18 is still decent. Okay, but it keeps falling. Right, people are hedging less fear. That's what moves the market there. All right, we got about 5 minutes. All right, we can go right to the hourly charts. We've been analyzing those for you guys. I've been analyzing those. Let me pull that up for you guys and see what happened yesterday and why I took a long. I put it in my Discord why I took the long yesterday. So let's look at it together here. We got our 1 hour charts here. We'll probably stay here for the news. All right, now if you look at levels here, okay, this is an hourly chart. Let's just move down here so we can see the channel, all that jazz. All right, so okay, so yesterday, right, look at this is last week's highs, this orange levels, that's last week's range. Okay, so we opened on Sunday, pushed down right to last week's highs, right, and then boom, right, big move up, big move up. Now what I did is I put an anchored VWAP right there, and this is when the market came up and slammed into that anchored VWAP, and I was patient. I waited for this to pull back, right? I think I got long somewhere probably in there because I got long on the SPY. All right, about 528, a little 528 and change, like the low 528s, and you ripped, right? So I had a nice trade there, but then it pulled back all the way back to my entry, probably in here, and I got stopped. I took half of mine off because I didn't trust the market, and then after that, it kind of bled up, okay, and then pulled back. All right, so that's that. Why I took that. Now, my point is this: that anchored VWAP really held this market in check. Okay, like I said, whenever you have the big gap like that, they're kind of hard to trade. And because you're going to have people who were, I explained this, taking profits, which will cause this market to go down, and people who were short will look for a pullback to get out. And that's usually what happens. And that's why we pushed up. And now look, we're kind of just moving up, moving down, moving up. And do we take this out at 8:30? Okay, now here's that trend channel that I talked about from here. You know, you can see it up from here and from here, right? And right now we're in the middle of this channel, which is not the best area, because what we can do here, got supply zone here, this can get ripped up. You got single prints from the past, supply, and like I said, around this 5900 area, this area could be a nice push back all the way to the other side. I don't know. Okay, we just have to see. You could even get a bad number and start to move back down to here. I don't know. Okay, but those are the big levels. Remember, 57.17 is the most traded price of the year, rolling year. And do we, as long as we hold over that, that's pretty bullish. And you got a big high volume node here that we held right here. That's another reason why I got long yesterday. I said, if that high volume node holds right here, we should get higher prices than we did, right? All right, I'm gonna kill this. Let's make it a little bigger because that news is about to drop. All right, I'm gonna put over here that news. Let's see if it drops. Actually, we'll watch price action first, and then I'll flip over to the actual news. Right in about 5 seconds, we're gonna have that news drop, and let's see. Expecting no change, so we'll see. All right, market's pushing higher, and there we go. All right, so the headline number went down. Like I said, remember oil was so low. Okay, oil has been low. Okay, so core inflation, we expected 2.4, we got 2.3. I'm sorry, this is headline. All right, so like we went lower, zero point 0.1. Now in the core, we stayed the same. Remember, core excludes food and energy, so we stayed the same. So that's why you're getting that little push up. Okay, so that's your news for this morning, right? Now, if we look at the Fed Watch tool, let's look at it now and see what the market's calling for here. Okay, there's your little Fed Watch tool here. All right, now currently for the next date, June 18th, we're expecting no change. Okay, let's look at the probabilities. Actually, current. Trying to see that nice little chart I had the other day. Chart. Ah, man, where is that? It was nice because it had like the probabilities actually on the chart. I don't know why I'm forgetting how to do that. I just had that the other day. Compare. There it is. Okay. Compare. That's what I got to remember. All right. So look at time, right? We were almost expecting a cut a month ago. See that? Down, 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 right? So right now, 91% chance we are out of pause next time. Okay. Now, who knows what happens from this? Remember, May is seasonally bearish. This could be a bull trap. I don't know. Again, I don't predict markets. That's just a fool's errand to predict. Because with Trump and China and all this, it's unpredictable to forecast stuff. It's too hard. Like, it's really hard. Okay. Now, with this being said, let's just go back to this hourly chart. And you can see we busted this supply zone. Came right into the single prints. I'm going to get rid of this supply. All right. That's your ES. Let's look at the NASDAQ hourly chart. Some levels here to talk about. Okay. Now, the same reason I got long in the SPY yesterday is because look where the NASDAQ pulled back to. Anchored VWAP, right? And the most traded price of the rolling year. Look where the bottom wick was. Right there. And I was like, you know what? I think that is worth to put risk on. And then the market ripped up, right? And now we're moving higher. So, I mean, if that was a swing trade for me, that would be pretty nice right now, right? But it wasn't. So, that's what we're talking about here. So, if we go to here, this chart, and we just pull it down, we have that trend channel all the way up here, and that could possibly be around the 212. Okay, get resistance here. You broke this. You broke this now. All right, so we're probably going to have another demand, a bigger demand here. Right here, I would guess. I would get. Let's see if it could be a 4-hour. Let's just do it in front of you. Let's see this 4-hour. If we can get a 4-hour demand zone here, might even be larger. Yeah, it's going to be larger. This. I bet you this could be like an 8-hour demand zone. So yeah. So what I would do here is I would just take this one and push it up to here. Okay. But I'll be honest with you, it could probably be an 8-hour or 6-hour demand zone. I will tweak that later. I don't want to. There's no need to do that now. So I'll go back to the hourly, and you'll see what it encompasses. Just when I did the 4-hour, how many candles that encompasses. You can see it right there. That's the move, right? That is the move that I'm looking at. All right, I think we can go now and analyze the market profile and volume profile. Why don't we do that? All right, so let's do that, let's look at the beautiful market profile and volume profile here, and we get some analysis going. All right. And I'm going to make this a little bigger. Alrighty. All right, so yesterday, we just recap it here. There's yesterday. All right, so yesterday, what did we do? Look at where we opened, right? And it was just a game. And what'd you do? Pull back right into that most traded price of the rolling. Oh, this is the NASDAQ. I'm sorry. Hold on. Sorry. That's your NASDAQ. Let's go to the ES. Okay. So here's our ES. Let's move this. Okay. So let's see what we did yesterday. Let's just go what we did. So same thing. Opened up, right? And then that was the game that we was played here. Pull back, right? I got long and got this move, right? And then it pulled back again. It wouldn't even have stopped me out, and then I had to move. And then it was just a barcode until it pushed later in the session. All right, so that's what happened yesterday. Sorry. All right. Now, where are we at now? We were gapping up just a second ago. All right, but now we're back into range of yesterday. Okay. If we look at some analytics here, you can see the most traded price of the month and of the week, I believe still, is down here, 56.80. Okay, that's pretty much your bull bear. You want to stay above that, along with your most traded price of the rolling year. That's your 57.17. Okay, now you can see there's the big move. You have single prints right here. That's a void. And that's another reason too I got long. You went into single prints and found buyers. That's bullish. Talked about that yesterday. Okay, now the job of the market is to move the most traded price of the week up to here. And this level seems to be the candidate, 58.50. Okay, let's see if that can happen. Because if the market cannot pull value to match price, price returns back to value. Okay, it's like a rubber band. Okay, it's like a rubber band. This is like very laggy. So, all right. So, let's look at some levels. All right. So, what do we have today? Just looking at this market, what do we have today? So, we had a bunch of shorts lining up here a little bit in here because we opened up, we pulled back, and now we're out of this consolidation right here, right? So, you have a very important level here that could become the most traded price of the week. That's your 58.52 about. That's your most traded price yesterday. You can see the high volume node here, right? Okay. So I would look at that. I would look at this demand as well. All right. I would look at this demand as well. And this is your low from yesterday, 58.05.75. All right. Because below this is a void. If a weak market will rip through that. Okay. A weak market will rip through that. Now we do have supply and the 5900 up here. CPI data. Welcome, Nicholas. The CPI data, we came core inflation stayed the same. The headline number, CPI, came 0.1 lower. Okay, 0.1 lower. Probably due to oil taking to having going down into the 50s. All right, so that's going to help out the headline number. Okay. Now we do have this 5900 up here. I talked about that channel line resistance. So 5900, this supply zone, I'll have my eye on today. Okay, so this is kind of the roadmap that I'm gonna look at today. Right, we're inside yesterday's range now. Came up here, people probably took profits, and now we're just gonna get into scenarios here. Okay, and welcome, Nicholas. All right, so let's do it. Let's do it. Why don't we get right into scenarios here? And I'm going to open this up, price action, because you just see market profile is only 30-minute bars. That's all it is, 30-minute bars. So now I'm opening it up so you can actually just see it's 30-minute bars. That's all it is. Okay. So let's get into it. All right. And here's your ES scenarios coming at you. All right. So we are going to start off with the bull side. All right. Now we have my zones, right? Mapped out. So prices right here, that dot. We saw the push up from CPI. People took profits. Okay. You have a very kind of complete profile, but to the downside, you have a bearish imbalance to this little overnight profile. You can see all the trading that happened down here, and you can see a bunch of support here. Okay, so that's going to be a key level of support there, that 58.37. Okay, 58.37. Okay, so if I am a bull, okay, let's say we even tap this overnight high, come back, pull back, and this would be an area that could turn into the most traded price of the week. Very heavily traded volume here at that 58.52. This could be your boop, and we just dribble higher up into this 5900. Like I said, that I believe will be resistance. Okay. Now, what else can happen? We can take out this 58.37, but we have another high volume node here with a demand zone. This was the original push up from yesterday. Okay. All right. So you could get support right there, and boop, 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 and we could start to move higher. Now, remember, we just had a big move. Okay. This move is huge. Okay. And whenever you get a big move like that, the market needs to digest it, right? Usually don't get another big move and another big move unless there's a news catalyst. So just understand that I think it's a limited amount that we can just go crazy higher. I think we could dribble higher, but I don't think that it's going to be an all-out higher. Okay, so I'm cautious on big longs. Okay, but they are in control. The bulls are in control. Now underneath this level, the 58.05, right? Yesterday's lows. I'm not interested in longs here. All right. If we take this out and we start dribbling, yeah, we could get a pullback into here, but that's just going to mean that the market's a little weak, unless this is like a flash and you come down here. Okay, so I'm going to leave that there of those scenarios. Now we're going to move over to the bear side, which I haven't really been short. I just got rid of that and I didn't want to. Let's put that back up here. That should be white, but you'll understand. It doesn't really matter. All right, let's go to the bear side. All right, so as far as a bear goes, right, you have a bearish imbalance to this profile. That just means that it's incomplete to the downside, right? This usually means that lower prices can happen. Doesn't mean it's automatic. I talk on probabilities. Nicholas, you're new. I would assume maybe this is the first time you spoke, but that's how I speak in probabilities. I don't predict. I only speak in probabilities. Okay, so we just had a nice move up, right? So what if the market opens up, right, and comes through the open? Now what does it do? It goes to this 58.52. This is a high volume node, right? If it comes through here, you're going to challenge that 58.37. If you rip through this high volume node, right, and say the market is kind of weak and we rip down, take out yesterday's lows. Now we start accepting prices lower inside this void, this single prints. You are going to clean those single prints and you are going to go back down to the origination of the move on Sunday. And you can see right here 57.41 is last week's highs. Okay? And if it gets really nasty, you go down to 57.17, which happens to be the most traded price of the rolling year. the most traded price of the rolling year. Okay, so I will be on the lookout for that. Now, of course, the other thing is if we just rip, right, rip, go up into this supply, 5,900, right? Well, it should hit that upper trend channel. Okay, you could get a touch, boom, lower high, and maybe we drift back into range. I wouldn't think this market then falls all the way down here. All right, I would think we continue to balance and digest the move. All right, so that is ES. We're going to move over and analyze the NASDAQ now. Okay, so let's do that. Let's do that. Let's collapse this. Let's open up the overnight session. Remember, it's just 30-minute bars. That's all it is. Okay. All right. So we're going to get right into levels. Let's see how structurally it is compared to the ES. Okay, you can see the push up. Now you did have an important level here. Okay, this is what I call a confluence high. You had a previous overnight high, 209.91, 209.96. This is the advantage of profile, right? I can see the session of the overnight and the real-time trading hours separated, right? So I know that yesterday's real-time trading hours high and overnight high were equivalent, okay? And we just broke that, and we're back under it, right? You want to sustain price above this, right, to move higher. Had to push up, that's profit taking, okay? Now, look at the profile here. I just said it, right? You got nice thin excess, and then you got that bottom, right? And look at this profile. Okay, all price usually is a bell curve. It's evenly distributed. It usually looks like this. Okay, and that's the beauty of profile. Okay, it's the beauty of profile. It just lets you know, oh, I can just look at the profile and just go, all right, it's got a bearish imbalance to it. We could possibly get excess here, right? Could it's called a corrective action in profile. Okay, so right off the bat, you can see all this support here, right? So a level to pay attention to is this demand zone with the 208.13 support. That's your first line here of defense for the bulls. Okay, then you got a bigger demand zone down here, so you got kind of like a double demand here, right? In the bottom of this, yesterday's lows lines up with the most traded price of the rolling year, this big box here. So that's really your support and your bull defense. Okay, and then what's under that? You have single prints, right? The big void in price action right there. So that's your void, right? Market cannot take that out along with this most traded price of the rolling year. Okay, so let's go right into scenarios here in the NASDAQ. All right, let's look at the bull side. Pretty simple here. All right, so price is all the way up here. Now, what could price do? A couple things here. Got that confluence high at 209.96 to 209.91. We could push up, pull back right to that level, and fire off, right? Go right to the 212 supply zone. I don't know how much I'm interested in that move, right? Not sure. We could also pull back into this demand zone and this support level, right? It might be a little bear trap here and go whoop, higher low, and then you can start to make your move up higher. Okay. Even down here, I'd still probably be interested. Okay, you break this low, and if you hold this monster level of the most traded price of the rolling year, you could still, I would say, I don't think you go all the way up here at that point. You might just like stop somewhere in here. That's really all I'm looking for as a bull. Okay. Now, as far as a bear goes, okay, what I would see here. Now we have this supply zone up here. I don't know if we get up there to 212 today. I'm not sure. Okay. And I could see this. Taking out the overnight highs. There is a naked VPOC here we might hit. Naked VPOC is just an untested most traded price of the day. Lower high, lower high. And then I would think, see this thin volume? You could take that out. Okay. Then you go into this high volume node and you go into this demand. This 208.13 is very key support and demand. If you crack that, okay, you have this big level. All right. This is where it all rubber meets the road. The most traded price of the rolling year is right here. And then you have the single prints. If you crack that and price, you start to accept value here. Yeah, boom. You can go right down to last week's highs. And that would be not a good sign for the markets. Do I think that's going to happen? Probability, probably not. But we never know with this market with news catalyst, right? So that is my analysis for today. Hopefully you enjoyed that. If you did, you know what to do. Smash that like button. That'd be much appreciated. Okay? Much appreciated. Now, as always, if you could join me every morning, that would be great. I give you the lowdown on the markets, right? The market story. And I don't predict, right? I'm not going to tell you I know exactly what this market's going to do. I'm always scenario based. I'm always if then statements. If this does this, we should possibly do this. If this does this, we should possibly do this. All right, so I gave you the long and short trade scenarios. We got our plan, right? The next thing now is executing it. That's the hardest part of the game in trading is executing your plan. Because you could always be right on movement, right? But maybe your stop gets hit and then it goes without you. That's what makes trading hard. All right, it makes trading really difficult. I don't sugarcoat it. It is not an easy game. Okay, so everybody, stay green. Remember, no trade's a trade. All right, and if you want, I update in the mornings. I tend to only trade up to 12, so I give my insights on the market, what I'm seeing, and join me if you want to see more live. I'll only probably join my Discord on my YouTube homepage. Okay, if I get enough interest to go live again, I'll start going live again. All right, so if you're interested, come join. All right, I'll be updating what I'm seeing live in the markets. Okay, so with that said, if you don't come there, I'll see you ready tomorrow.